All right, October looks like it's turned to Downtober today with the Magnificent 7 getting absolutely crushed. And so I think it's time to dive into the charts and get a reassessment of support and resistance and what are they telling us about some of our favorite big tech stocks. Is it time to buy the dip? Is it time to buy the Uptober Monday that could be right around the corner? Well, we're going to see what the charts say. Did we come back enough? I'm going to compare them. I'm also going to use the golden rules of thumb that I've given you guys for analyzing a correction. And yes, we've had a nice little run up off of recent lows, and so we're getting a little bit of a correction. And so what are our rules? Well, the first rule of thumb is which stocks are moving the fastest. So which ones are going down the fastest, but also which ones are recovering the fastest. That's the first rule. The second rule is, are there any outliers? Are there any that are going down the least right now that seem to be a little bit separating from the pack, maybe even going up? Well, I'll just answer that right now. Everything went down, but I do think that I found one that might fit the outlier category. And then number three, which was the hardest hit and which was the least hit. So basically, which one got hit the hardest and which one got hit the least. With that in mind, I've taken time to analyze all of the Magnificent 7, but I don't have enough time to share that with you today. So I'm going to give you guys 3 of them. And then in my very next video, I'm going to give you guys the next 3. And of course, if you are part of the Patreon, you know that I'm going to then take those charts and I'm going to share them with the Patreon so you can keep an eye on it and further study my technicals so that you can do your own due diligence to make a decision about these big plays. So real quick, what worked today and what didn't work? Well, the QQQ puts was absolutely killing it today. Larry Jones was leading the pack over in the Patreon, giving updates all throughout the day on what he was doing with shorting the QQQ. And the AMD strategy that I've given you guys this week has continued to work exactly as planned. We ran it up to $111 the other day, and now we're trying to ride it down. With all the plays I'm going to share with you, I don't intend to hold anything overnight. Even if the chart looks bullish, even if the chart looks bearish, because we're in extremely choppy waters and you don't want to get greedy. These things have been moving down strong into the close. They could turn right around and pop on Monday. So you need to be careful about the assumptions you make about the direction of the market. Now, largely, we're in a correction and there is no confirmation that that correction is over. We'll see what the charts say here in just a minute. This is the Stocks with Josh show. Thank you guys for joining me. I'm going to try to give you a nice, tight, quick video. The technicals for some are boring, but I hope that you guys can dive in and see these charts, the price action and the story that gets told in the technicals through my eyes. I'm going to go through them very carefully with you guys, but I'm going to give you some of my analysis on the front end, even for the stocks I'm not covering today. So when it comes down to which stocks were the fastest movers, I'll tell you that it was some of the usual suspects: Meta, Tesla, Nvidia. Man, they were the fastest out of the gate to go down the hardest. In particular, Meta was getting creamed today, and so we got to keep our eye on that. So those were 3 that were getting hit the hardest, which means that they could continue to get hit the hardest. But Microsoft was an outlier. Microsoft was the least down today, so they were hit the least. And that brings us to our category of which recovered the fastest, and I would say 3 of them did. Apple, Microsoft, and Amazon came off of their lows very quickly and gave us a handful of green bars at the end of the day. And so we want to keep our eyes on those as possible winners moving forward. All right, before I get into the 3 stocks of the day, if you need better trade tools, check out the offer from the Moo Investment app. They're giving away free stock. They're available in the US, Australia, and Canada. I love their tools. They're currently giving away up to 16 free stock. It's a zero cost to trade platform. Click on the link in the top pinned comment to get the details and the best offer for you. All right, let's just get right into the Apple chart, guys. I'm going to give you support, which means this is where the stock could pull back to, and I'm going to give you guys resistance. Support right now, we're actually right beneath support at $179, and so it's possible that we could quickly reclaim support, which would be very bullish. At the moment, that's no guarantee. Now, the resistance above that I've been telling you guys that is really the target that I think it's very possible for Apple to get to is $185. And so if this upward trend continues, 185 would be my ideal target or take profit zone. Overall, Apple only went down 2% largely today. And then here's one of the biggest takeaways before I get into all of these charts is that all of the Magnificent 7 went down today on lower momentum or on low momentum. And so what that specifically looks like is price direction is determined by the price going down, but volume tells us how fast it's going down or how many sellers are piling onto the market. And specifically, I would say that it tells you whether institutional sellers are dumping their bags. And today, these all went down on lower volume. And so there wasn't confluence to the downside, right? This often can signal a reversal because there's low conviction to selling, not high conviction to selling. And some people would be like, Josh, how can everything go down, but you're telling me that there's not a lot of momentum? Some of my favorite stocks dropped quite a bit. When the stock moves down, it could be moved down easily simply because it's not being met with a lot of buyers. So there were few buyers today, but there weren't a ton of sellers. People were selling into the environment, but not at a high level. And so when Apple went down, they actually went down on negative 16% typical daily volume. So that actually is a bullish signal. Now, we had ascending support for Apple. I want you guys to see that we are above an ascending support, which is also a bullish narrative. Ascending support means that we could continue to bounce and move higher. Now, the best case scenario for this would be a quick recovery above $179, and then that would tell me that 185 seems to be a pretty clear target that we could hit. But from a bearish point of view, we can easily pull back to support right now at 176. And if that were to break, the next support beneath it is 173.50. Now, I had somebody say something to me in the comment section where I gave two levels of support, and they said, Josh, you were wrong. It never hit that second level of support. And so I'm just going to explain something to you guys. If the stock bounces off of support 1, then support 2 is irrelevant. Support 2 only comes into play if we get a close beneath support 1, right? That's when you know where it'll go next, right? But if it drops briefly below and closes above support 1, then it means it's not going to support 2. So if support 1 breaks down, which I'm calling 176, then we could go back to the support that we spent a lot of time at, that 173.50 or that 174 range, and we could come back and refine support there. But largely, I'm not convinced that Apple wants to go down. I didn't see enough momentum to the downside today. And if we go into the RSI for Apple, we see that we're still operating off of an oversold signal, and that's bullish for me. It means that the worst momentum to the downside is behind us. That's what took us from 200 down beneath 170. That was that oversold moment, and now we're beginning to rebuild. And so that the RSI looks bullish to me. I think there's strong bullish divergence on it as well. Then if you go over to the MACD, we don't have a great signal there. We've only begun to curve over, and so we might have a immature situation on the MACD. We may need to wait for the price action to fully curve over and begin to rebuild. And so the MACD wasn't giving us a clear signal. Overall, I would just be cautious with the awareness that unless we see some momentum come back, it's very likely that we'll come back and find support at 176 for Apple. All right, let's dive into Microsoft. Microsoft was, in my view, the winner of the day from the standpoint that it had the lowest volume for the day to the downside, and it also had the lowest drawdown. It was only down 2.02%, which was pretty darn good. It beat Apple for being the least sold stock today. Now, we see support for Microsoft at $324, and we see resistance at $334. And so if 324 holds, then I would say that the price range that we're in is a movement between those two ranges, 324 and 334. Now, I would see that we do have support from an ascending line, which has not broken down. That's bullish. And so again, we could possibly reclaim 331, and then we would be on our way to 334. But if we don't and we break down, then we know that we're going to go to 324. And then if that were to break down, the next level where we would take a chance or go long would be 318. Now, if we dive into the RSI for Microsoft, it really is neutral. That's really what I saw. I began to notice between this RSI and the next one that the price is compressing and largely beginning to flatten out. Now, when you see price compression, it will eventually lead to expansion. And since we're not dropping significantly down, I don't consider this too bearish just yet because we're largely right in the middle of the trade range, processing some data. And so if we do find support and then begin to go back up, it means that we still have room to the upside on the trade range. We do not have a confirmation of a breakdown. Microsoft really is sort of flattening out. Now the MACD was a little bit more bullish. I saw more bullish divergence on the MACD, but again, just like Apple, the curve over was early, which means that there could be a couple more days before this finds potentially momentum back to the upside. And so I would keep my eye on a potential buy zone of 324 as a support. Now, Tesla. I know that there's a lot of folks that love the Tesla calls. I'm going to tell you guys that largely before I even get into the charts, we still have support at 244. Right beneath 244, we could hit 241. It's one of those scenarios where it comes down to 244 at the end of the day, and then early pre-market, it'll dip to 241 and then recover back above 244. Largely 244 is support, and above us right now, we have the resistance of 261. Now, we have come down almost 7% today, which makes it one of the more bearish stocks of the day. The volume to the downside was neutral. So it went down near $8, but it only went down on negative 3%. I would say that's near typical volume, which is neither bullish nor bearish. We do have a clear broken ascending support line, but that's also normal for Tesla. It will absolutely break through all sorts of support lines. Now, I think that if we were to go bullish, we would have to quickly reclaim 256. If we did, then I know for certain that we would hit 261, and then 271 would be back on the table. But if we are going to be in a bearish mode for the next couple days, we need to be keeping our eye on 244. And if, like I said, 244, if we stay in that zone for too long, we'll likely test 241. If that were to break down, we know that the support beneath that, which would be very strong support, and that's where you'd have the most confidence for a swing trade, would be 234. At the moment, I think that we are largely compressing and moving sideways. We've simply come to the middle of the range, and now we're going to be looking Monday for the markets to tell us what it wants to do. Are we going to pop back up and continue to move higher, or are we going lower? And I'm going to just remind you of kind of what I said before. I largely think we've spent enough time at the lower range and not enough time at the top of the range. And so I'm not convinced that we have finished the run up on the Magnificent Seven in the near term. So in my very next video, I'm going to be covering Nvidia, and I will warn you that out of all of the charts, Nvidia was the outlier for poor performance. I saw the most weakness there, and it really had an incredible run up. So just the fact that it's facing weakness, let's kind of reanalyze some of the things I've been telling you about Nvidia. I've identified a clear head and shoulders pattern, and I told you guys that if we got to the, first of all, I told you that we would get to the levels we got, and then I told you that if we got there and we broke down, we would be completing the right shoulder of an extremely bearish head and shoulders pattern. Now, for that to be confirmed, it has to come all the way down to the neckline, which is right around 408 or 409. Now, it's still not confirmed unless it breaks beneath it and closes beneath it for a second day on the daily candlestick chart. Now, if that were to happen, then it would be telling us that Nvidia is going on a longer-term cool-off, possibly to 384 and then to 346. Now, that's not confirmed. It's what we're watching, but so far it's playing out pretty accurately. And today, Nvidia was the outlier of bearishness, which means that that pullback could be coming. We got to keep our eyes on it. So Nvidia, Google, and Meta will be the next for me to cover, and I might throw in Netflix and a update on AMD in my next video. We'll see. I got all this for you guys, and I had a little story I wanted to share with you. I went to the BMW dealership. I've got a BMW M5. I took it for some minor repairs. Those minor repairs amounted to around $2,200, which was no big deal. But then they told me that they saw some moisture in the headlight. And I said, well, run me some numbers on what it would take to repair that. I don't want moisture in the headlight of my BMW headlight. And they said, okay, good. And they ran it up and they said, well, it'll be $6,400 to replace. And I was like, $6,400, are you going to replace both of them? And they're like, no, that's just for one. And I thought, wow, man, that's incredible. There was a couple thoughts went through my brain. One is, man, cost of goods are going up. I had something similar quoted some years back, and it was around $3,000. That's why I thought she might have been talking about both of them, because she was talking $6,000, but she was talking $6,000 for one. The second thing I thought of is that the laborer is worth his wage. I don't know how to repair that light. I don't know how to take it apart. I don't have the time to take it apart. I don't have the time to learn. And so at the end of the day, if I want that headlight fixed, somebody who knows how to do it has to do it. And my point in all of this is, if you are not a master of charts, but you're able to come here and get someone who has spent years analyzing charts and giving you his knowledge, I want you to be aware of the value of that, because I'm keenly aware when I go to pay that bill over at BMW, the value of the knowledge of the men in the back who are holding on to those wrenches. I want you guys to hit that subscribe button if you can appreciate the technical knowledge that I'm laying out for you guys today. You know I love you. I look forward to sharing the next video with you. We're going to do some analysis going into Monday. I'm going to post these into the Discord, the Patreon. If you're not a member of the Patreon, there's been nothing but money getting made in the Patreon. Get over there, click on the link. It's the Stock Squad. It's the four of us. Stock Up with Larry Jones, who was killing it today. Stock Mo and Keenan Grace and myself, all giving you knowledge over there. Click on the link and check that out. As always, peace and blessings, my friends. We'll see you soon.